Hello traders, welcome back to my channel. Today we are going to analyze how did I manage to book around 100 points profit in Bank Nifty option. Here you can see the chart of Bank Nifty 45,300 put, and my entry was around 325 and exited at around 430. With a risk to reward ratio of 1:2.94, we can easily consider it as 1:3. So this is the option chart. Here you can see that exactly at 11:35 asset gave a bullish breakout. So after the bullish breakout at 11:36, the candle broke this previous candle's high, and as soon as it broke the previous candle's high, I placed my entries. Now why did I place my entry? There is one confirmation lies in the option chart, that is these three candles. This is the first candle, second candle and third candle. Now these three candles are called as the three white soldiers. Now this is the typical entry pattern before the breakout, and that is why I enter exactly at around 11:36. So without any further ado, let's jump into the spot chart and analyze what was my exact theory behind it. And before that, here also you can see that I did not wait for the retest. And if you have been watching my previous videos, you will be knowing that if I didn't wait for the retest, it means that there was traps involved in this setup. Now in order to analyze the traps, let's jump into the spot chart. So this is the spot chart, guys. So today asset exactly opened somewhere over here. This was the first candle, 9:15 candle. After that asset started to show bearish momentum. After the bearish momentum, asset gave a bearish breakdown. Now this was the breakdown I was talking. After that I placed my entries at around 11:36. Stop losses and targets were purely based on my option charts. Now you can see that just after this breakdown I have entered. You might have think that this is just a normal bearish momentum, and after that I have placed my entries over here after the breakdown. Remember traders, this is not just a normal entry. Even if you apply Fibonacci from this particular swing high to this particular swing low, you can see that there is no any consistent validation, because it's not getting rejected from 23% level and not even from 38% level. It's getting rejected in between. So there are other factors involved. So let's analyze 15 minutes chart. In 15 minutes chart, we can see that asset was trading in a descending channel pattern. This was the first rejection zone, and here is the second rejection zone, and this is the third rejection zone. Now let's identify the supports of this channel pattern. This is the first support, creation of the channel pattern, and here is the second support, and here comes the third support. Now after the rejection from this channel pattern, you can see that asset gave a strong bearish momentum, and I have placed my entries. Now this was my first confirmation to look for the bearish setups. Now let's apply Fibonacci from this particular swing high to this swing low. We can clearly see that this rejection zone easily coincides with 61.8% level. So this was my second confirmation to look for the bearish setups. Third, in order to identify third confirmation, let's just increase the Fibonacci tool from this level to here. Now what does it show? This level is once again getting rejected from 38.2% level. So now I can call this level as a Fibonacci clustered rejection zone, because there are multiple Fibonacci levels acting over here, and that's why we call it a cluster. And this was my third confirmation to look for the bearish setups. Now as you know, I have told that I did not wait for the retest. That is because there were traps. Now let's identify the trap. For that, let's just scroll back into the time, and we can see that asset was in a bullish structure. It was creating consistent higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now let's remove some of these arrow marks in order to reduce the confusion. Okay, after this higher low, we can see that asset was pretty much in a sideways direction. Later on it broke this structure. Now as soon as it broke this structure, that is this previous swing low, it is confirmed that asset is going to trade in a bearishness. Now this was the another confirmation, because it clearly coincided with this rejection zone, and from there we traded negative. Now since this was trading in a channel pattern, the theory of this channel pattern is bullishness. That is, once the asset gives the bullish breakout somewhere over here, after this rejection, if asset gave a bullish breakout somewhere over here, and then there is a high probability that asset is going to trade positively. But what did it happen? It didn't give a bullish breakout. Here you can also see that asset was trading in an inverted HNS pattern. This was the left shoulder, head, and here is the right shoulder. Now what does the majority of the retailers do? The majority of the retailers know that in order to validate this channel pattern, there is going to be a bullish pattern somewhere over here at the bottom of the support zone. Now majority of the retailers have found this HNS pattern, and asset gave a bullish breakout of this neckline somewhere over here, and majority of the retailers might have entered exactly at this green candle, exactly here, and the stop losses might be somewhere below this. Let me remove this HNS pattern. Yeah, and the stop losses would be somewhere below here. Now this was the first trap for the retailers. Now let's analyze another trap. Now that trap lies in 1 minute time frame. So let's jump into the 1 minute time frame. In 1 minute time frame, we can see that after this major rejection from this channel pattern, asset was pretty much trading negatively, creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on. But exactly at this particular point, asset created a lower high, but it did not break this previous lower low. After that, asset created another higher high. So what does it mean? In 1 minute time frame, asset changed its structure from bearish to bullish. Now this is the thought process of the majority of the retailers. And in order to validate that, asset also gave a bullish breakout. After the bullish breakout, our asset also gave an area retest. A majority of the retailers have been entered, some might have entered over here, and some might have entered after the retest. But what's going to happen? The stop losses is just going to be triggered. So this was the second trap, and that is the reason I did not wait for the retest. Now let's jump into the option chart. Here you can see that asset gave a strong bullish momentum, and you might also say that I could have waited in order to catch some more points. But traders, you may never know. After achieving 100 points, it can also turn negative and it may trail stop loss at break even, or if I haven't trailed my stop loss at break even, then it could have triggered my original stop loss. You may never know, because I have also experienced this. So my initial threshold is 100 points. If you have watched my previous videos, you could know that easily I am booking profits at around 100 points, 70 points, 130 points. So 100 points is my threshold level, and once the 100 points is achieved, I'm just out of the trade and I'm done for the day. I'm not going to risk my capital once again in order to gain profit, or whether it can turn into a loss. So I'm not gonna risk it once again. So once 100 points is achieved, I'm out. So once again, let's do the math, traders. So what does one lot of Bank Nifty contains? Consider you are a new trader and you are just trading with one lot. Okay, so one lot of Bank Nifty contains 15 quantities. Now 15 quantities multiplied by my entry, 325. At 325 multiplied by 325, it is 4,875. So you just require 5,000 rupees in order to gain a profit of 100 points. Now 100 points multiplied by 15 quantities, that is 1,500 rupees. That is more than 32%. So that's enough, traders. So majority of the retail traders just target for around 10% or 25%, but here I'm gaining more than 30%, and I'm done for the day. If you found this video helpful, please consider giving it a like, leaving a comment, and sharing it with your fellow traders. Until next time, take care and happy trading.